Happy Monday, everybody, and this is Tony, the Geeky agent here in Hamilton. We're just getting ready to go, and here's my absolutely beautiful face for you all on this Monday. I hope you're all having fun. It's really cold and rainy here in Binbrook. It's actually not too cold, but it is very rainy. I am just watching your comments here, so every time I kind of look away or something like that, I'm just trying to read your comments. If you have any questions, please feel free to leave them below. We'll be pretty quick today, I hope. We're just going to go over the new Canadian mortgage rules, how they impact you with actual dollar numbers and percentage numbers, so you have an idea as for when 2018 rolls around, how exactly your buying power is going to be impacted, and how you can kind of get around it. These rules were put into place by OPSFI, the federal regulator, and there are a couple of things you can do, and the banks are working on things, and mortgage brokers are working on things to kind of help you regain some of that buying power in the new year. So without further ado, I see there's a whole bunch of people already tuning in, which is great. It's 12:31 and we'll get started. So as I mentioned last week, I'm just going to pull this quickly up. This happened last week. So OPSFI, the Office of the Supervisor of Financial Institutions for Canada, this is a federal agency, did announce last week that they have new mortgage rules specifically for uninsured mortgages. So to quickly recap, if you are putting down less than 20% on a mortgage, you have to obtain mortgage insurance. At least the banks do, and most lenders do. So you go through the Canadian Mortgage and Housing Corporation, CMHC. You can go through Genworth and a couple of other places, but basically there's insurance involved there, and majority of that through CMHC, and that are taxpayer money. So they introduced rules probably about a year ago to shore up that side of it, to introduce what they call a stress test. So if you are getting approved for a mortgage at, say, 2.5%, that's great. You can have your mortgage at 2.5%. You have to qualify at the bank posted rate. The bank posted rate at the time was about 4.6%, which is roughly 2% higher. And if you could still qualify for the mortgage at that rate, then you are allowed to take your mortgage at 2.5%, put down your 5-10% down payment, and carry on. So just last week now, OPSFI decided to extend those rules to uninsured mortgages. So that's people who are putting down 20% or more. They're low ratio mortgages, as they're called, and they don't require insurance. So they don't require any taxpayer money to back them up or anything like that. But the regulator thought it would be a prudent thing to do because they think that we don't know how to spend our money. We get too far into debt. So they thought that this is what they would do. As a result of that, the rules are slightly different now for the uninsured mortgages. If you're getting a mortgage now, which is roughly around 2.8 to 3%, you have to be able to qualify at either that rate plus 2%, or Bank of Canada posted rate, whichever one is higher. So if you're getting a mortgage at 3.0% at your lending institution, you have to be able to qualify at this point if you're getting a 3% mortgage at 5% overall. If you can do that, then you can carry on and get your mortgage and put your down payment down and everything like that. But it does impact how much you can borrow. As you can imagine, if you're qualified to borrow at 3%, you get a certain maximum amount of money that the bank is willing to lend you. If you have to qualify at 5%, that amount is much lower. And as you can have a look here, I played around a little bit online and pulled up a bunch of numbers for us to have a look at. So if you have a look in the chart on the far left-hand side is a bunch of different household income. So this is the total income of all the people in the home who are going to be contributing to the mortgage. So it goes from anywhere from $50,000 to up to $200,000 and everything in between. The second column will show you what a 20% down payment at the maximum amount that you're permitted to borrow is. So that fluctuates depending on your max amount. So I was using ratehub.ca, just a regular mortgage website, just to kind of use their calculator. I don't really promote or I'm not sponsored by RateHub or anything like that, but I just use their online calculator just to see what the numbers work out. And you can see the assumptions made on the bottom, or the presumptions, made on the bottom. You're presuming that you're going to make a 20% or greater down payment. And then the website will estimate certain values for you. They'll give you a basic number for your monthly property taxes. They gave you a basic number for your monthly heating costs, and they factor that in. The important thing to note is when I'm looking at the numbers at 3% and at the 5% stress test level, those values stay the same. So I carry over the same down payment that you have at 3%, carry over all the values to keep them exactly the same. And the only thing that changes is the interest rate from 3% to 5%. And as you can see based on the chart, if you're in the $50,000 range, At 3%, your qualifying maximum home price is $337,000, just a little bit above that. Once you undergo the stress test, though, that maximum is limited to $289,000, which is a reduction of $50,000. So if you were told at 3% that you could look for a home today, up to $337,000, you might not want to press the limit. You might not want to go right to the edge of what you can borrow, but you still might be looking in around $300,000 to $310,000. But once you're put under the stress test in the new year, your max actually tops out at just under $290,000. So you should be looking for a home somewhere in the $270,000 to $290,000 range, not the $300,000 to $310,000 range. As you move up the chart, you can see if you're making, say, in the middle of the chart, the household total income is $100,000 per year. You're looking at a down payment of roughly $140,000 in the 20% range, and your max under the 3% rule right now, or 3% interest rate, is $706,000 roughly. But once you apply the stress test, your max purchase price goes down to $605,000, which is a reduction of $100,000. So we're not talking about people who are like right at the limit of what they can borrow. You can be someone who's actually being pretty reasonable. You're told you can borrow up to $700,000 to purchase a home. You could be looking in around $620,000 to $650,000 because you don't want to push the limit. And again, you're kind of capped at $605,000. So now you really should be looking at homes that are $580,000 to $600,000. What that does ultimately, and I'm just going to flip back to my little camera view here so you can see me a little bit better, is that as you move up in price range, the number of people who are able to purchase a home shrinks. So as you can imagine, there's probably a lot of people in your city that can afford to buy a home in the $500,000 price range, let's say. But there are a lot fewer people who can afford a house that's $1 million or $2 million. So it's a pyramid. So you know, a bit of a pyramid like that. And as you go up this pyramid, the number of people able to buy your home is getting smaller. What this effectively does is shifts that pyramid down. So now if you are trying to sell a home, as I am on the West Mountain right now, I have a home listed for $650,000. There's a certain pool of buyers that are able to buy that home. Once the new year comes, it's actually going to be the pool of buyers from the next level up that will shift down. So there'll be fewer people able to afford that particular home. And that happens at all the different price ranges. So what will it do to the overall real estate market? Remains to be seen, to be honest. But generally speaking, what's happening is this. So if you calculate all these numbers, overall, this is the gross effect. So in each one of those price ranges, the numbers, based on the numbers I calculated on RateHub, the purchasing power of each buyer and each buying class went down by 14.2%. So across the board, buyers are having their purchasing power diminish by 14.2%. Will that have a negative impact on the market? Possibly. Very possibly it will. People are going to be able to afford less of a home, so they're going to be looking in lower price ranges. There'll be less people available in any given price range to look at that particular home for sale. And so that will probably put a downward pressure on the overall market. Will it have a really significant impact on the market? Again, it remains to be seen. I wish I could predict, but it does seem it will have some impact on slowing down the market, which is already balancing itself out as more supply comes online. So how do you get around this? So basically, I'm going to put you right back here for a second. OPSFI is the federal regulator, so they are part of the Canadian federal government, which regulates all the big banks and other lenders who are federally regulated. A lot of credit unions, or I think most credit unions, are provincially regulated, so they are not covered so far by these new rules. We haven't heard anything lately to suggest that they will be. So you do have some options. If you're not stuck on getting a mortgage from one of your big banks, you can go directly to someplace like a credit union or possibly a private lender, a non-federally regulated lending institution. You can talk to a mortgage broker so they can actually have a look at all your different options. They can see what's available to you if you go with the banks versus what's available to you if you go with a credit union or other type of lender. I will put in the caveat there that when you are working with a mortgage broker or some of these other institutions that are not the federal banks, there are other fees involved. They're essentially middlemen. So they do have to get paid. So the people that work for the bank get paid by the bank, and they do their mortgages and all that sort of stuff. But if you are working as a mortgage broker, you're providing a service. So there are additional fees that apply when you're working with them. And you also might be responsible for things like having to pay for an appraisal if one is needed, and those sort of things. So just to give you a heads up, if you are talking to a mortgage broker, just to get the full story about what type of fees and other things might apply, so you don't go into it blind. Basically, that's it. So that's probably the easiest way to get around this in the new year if things don't change between now and then. We're looking at another potential rate hike. We've already had 2 and possibly 1 more before the end of the year. That's kind of where we're at right now. If you need any assistance sourcing a mortgage or have any questions about your particular situation, please feel free to contact me. I can put you in touch with a mortgage professional. I'm going to remind you we do have a new website up called openhouseonline.ca. If you are interested, please visit openhouseonline.ca. You can do a 3D tour of my current listing on the Hamilton West Mountain at 91 San Pedro Drive. You can walk through the entire house in 3D, look all around, zoom in and see stuff, see what's available. And just wanted to remind you that I am Tony. I am the Geeky agent from RE/MAX here in Hamilton. This is RE/MAX Geek TV. I do appreciate you all tuning in. If you do have any questions for me when we're not in the broadcast, please feel free to text or call me at 289-237-9896. You can email me at tony@thegeekyagent.com. If you want to check out some websites, you can go to thegeekyagent.com, but if you want a search website, please feel free to go to hamiltonlifestylesearch.com or lifestylehamilton.com. There you can search for a home based upon your commute time, what kind of school district you want to live in, what cities, and all the regular stuff, how many bedrooms, bathrooms, price range, all that sort of stuff as well. So please feel free to use that. If you're looking for me online, I am pretty much everywhere. Find me on YouTube at The Geeky Agent, Twitter, Instagram, Snapchat, Facebook. On LinkedIn, you can look up, you can search by The Geeky Agent, or you can also look up Tony Iacoviello. You'll find me there. So thank you all for tuning in. It is just the beginning of the week here. We'll try to do a few more of these broadcasts later in the week. As more information becomes available regarding the mortgage rules, we'll update you here. A couple of market reports later this week as to what's happening in the Hamilton market, specifically Hamilton, the areas that I work, like in Binbrook, in downtown Hamilton, East End, that sort of thing, but the city in general as well. If you have any specific topics that you would like me to cover, please feel free to message me. If you have any questions for me, we can set them up for a future broadcast and answer your questions here. And that's about it. It is a bit rainy, like I said, but still about 18 or 20 degrees, which is crazy for this time of October. But I hope you all have a great rest of the day. I am Tony, again, the Geeky Agent from RE/MAX. And as always, I'll talk to you soon. Take care.